Economic bubbles. We've all heard about them, from the dot-com bubble to the housing bubble. But have you ever wondered where the term bubble in finance actually came from? Welcome to London, 1720, a place and time of opulence, intrigue, and the South Sea bubble. As the 18th century dawned, London began to hum with financial potential. At the heart of it all were the bustling coffee houses. Think of them as the Wall Streets of their day. These weren't your typical cafes. They were the epicenters of trade and news. This was where fortunes were made and lost. In this climate of ambition and intrigue, the South Sea Company was born in 1711. But it wasn't a mere business venture. It was a political maneuver. Spearheaded by Lord Treasurer Robert Harley, the company was founded with a dual purpose: to facilitate commerce and, more crucially, convert national debt into company shares. This conversion was designed to ease the government's financial burden after years of war. The South Sea Company wasn't just another trading company. It was deeply interwoven with the state. Its initial success was backed by the very essence of political and financial fusion. With its lofty mission, the company promised investors a monopolized trade route to the South American colonies, painting visions of vast gold and silver mines. It was the perfect sales pitch: trade with the exotic Americas, government support, and the allure of precious metals. Who wouldn't want a stake? The buzz around the South Sea Company grew louder, resonating through every corner of London. What started as a political solution was becoming the talk of the town, the beacon of boundless riches. The allure of the South Sea Company was undeniable, but what transpired to drive its meteoric rise and cataclysmic fall? By absorbing a significant portion of the national debt, the company wasn't just another commercial venture. It wore the badge of state endorsement, enticing trust and investments. Beyond mere trade, the company sold dreams. Grand tales of untapped wealth from the Americas made rounds, further fanning the flames of speculation. The narrative was compelling, but in reality, Spain's grip on South America left scant opportunity for British trade. To amplify the allure, the company's leadership engaged in sly tactics: strategic gifting of shares to the elite, rampant insider dealings, and planting juicy rumors kept the stock price surging. London was abuzz. Everyone from dukes to cobblers believed in the South Sea promise. The line between fact and fiction became alarmingly blurry. But as with all bubbles, cracks began to appear. Some insiders, sensing an unsustainable rise, began liquidating their shares. This move did not go unnoticed. The alarm bells rang when a few directors and influential stakeholders started selling off. It was the beginning of a panic. The bubble's burst wasn't just a quiet puncture. It was a violent explosion. As more and more shareholders tried to cash in, the stock value plummeted, and the company's grand promises lay bare. News traveled fast. When people realized that the vast wealth and trade prospects were largely a mirage, panic set in. The government, desperately trying to salvage the situation, took action. They shut down the London stock market for a whopping 10 days, hoping to stem the panic. But when it reopened, the prices kept tumbling. The company's leadership, once celebrated, was now under intense scrutiny. Many were arrested, assets seized, and trust was broken. At the center of it all was the South Sea Company's management. Accusations of deceit, of fraud, and of gross negligence echoed through the corridors of power. A tale that started with dreams of gold had left many with nothing but ashes. As the heady summer of 1720 advanced, not all was well. Amidst the gilded promises and soaring stock prices, a question began to haunt the alleys of London. Was the South Sea Company's trade really reaping the touted profits? A few astute observers noticed discrepancies. The company's purported profits didn't match the reality of the trade scenario. Those in the know started discreetly liquidating their shares. It only takes a spark to start a fire. Soon, skepticism replaced blind faith. An avalanche of sell-offs ensued. The structure was shaky at its core. Strip away the hype and you were left with a venture running largely on hot air. When reality struck, it brought down the house. The collapse wasn't just a financial blow. It was a societal tragedy. Families saw their life savings evaporate. Pensions were wiped out. And once prosperous merchants faced ruin. Beyond the numbers was the human cost. Stories of despair, bankruptcy, even suicides painted a grim tableau of a nation betrayed. The government couldn't stand as a mute spectator. An official inquiry was commissioned, and the parliament stepped in to investigate the debacle. The rot ran deep. From company executives to complicit politicians, the net of deceit was wide. Many faced trials, while some evaded through political clout. At the epicenter of this storm stood the South Sea Company's leadership. Their grand visions now appeared as mirages, their promises hollow. Public anger was palpable. There were demands for retribution, while some directors of the company faced prison. Others were heavily fined. But many felt justice wasn't served. In the aftermath of one of the greatest financial bubbles in history, a nation grappled with shattered trust and sought answers amidst the ruins. The South Sea bubble wasn't merely an economic blip. It was a catastrophic event that changed financial landscapes and inspired reform. The immediate aftermath saw public outrage and swift action. Parliament stepped in, directors faced consequences, and the very essence of corporate governance came under the scanner. In a bid to prevent such disasters, new financial regulations took shape. The Bubble Act of 1720 was one such regulation, curbing the establishment of joint stock companies without royal charter. The Bubble Act was groundbreaking. It marked one of the first attempts by the government to regulate companies. Its spirit echoes in modern corporate law. Beyond regulatory reform, the aftermath saw a marked shift in how companies operated. Transparency, credibility, and rigorous checks became essential tenets. The South Sea debacle made it abundantly clear that unchecked corporate practices combined with rampant public speculation was a toxic mix. It set the precedent for stronger checks and balances. It laid the foundation for many governance principles we regard as standard today. The significance of external audits, the role of non-executive directors, and the duty of companies to provide accurate financial disclosures. We can trace back many of our contemporary best practices in corporate governance to the lessons learned from the South Sea bubble. The emphasis on accountability, transparency, and ethical business conduct can be seen as silver linings from this financial cloud. It also changed the dynamics between states and enterprises. Governments became more wary, more involved. A symbiotic relationship, yes, but with a vigilant oversight. It was a tightrope walk. fostering business growth while ensuring public interests are safeguarded. The bubble was a stark reminder of this balance. Culturally, the bubble left an indelible mark. It became the muse for many, a cautionary tale, and at times a subject of ridicule. Even Sir Isaac Newton commented on this entire economic debacle. From the ashes of South Sea bubble emerged principles, practices, and lessons that continue to shape the financial world, reminding us of a timeless dance between ambition, regulation, and human nature. Bubbles aren't relics of the past. They're very much alive. From the dot-com bubble to the housing bubble, the story often feels familiar. The anatomy of a bubble remains consistent. Overconfidence, speculation, and the belief that this time it's different. So how can we spot them? When future returns are expected to be abnormally high without clear reasoning, rapid and unjustified price hikes, too much borrowing to invest, and when your barber starts giving stock tips, be wary. The South Sea bubble reminds us of the dangers of herd mentality and unchecked greed. While we can't predict the next bubble, we can certainly be vigilant. Because in the end, understanding our past might be the key to safeguarding our future. Thank you. Keep watching.